Hey, good morning, everyone. Welcome back to the channel. So today I wanted to discuss what it would take to fully recover an investment in Tesley, saying that we started today. Obviously, if we started as of, well, yesterday, our last trading day of the week, we would be at pretty much an all-time low in the fund. So let's see with the dividend that we're paying currently, or that we're getting, let's see where we would be off of, say, $10,000. Um, if we were to invest now, let's figure out where we would be. Yeah, what sucks even more actually is that I don't know if you saw, but Kumair and Oracle are allied now. Um, I'm not really surprised, but I think some of his other friends in the dividend community should really be um, like that's like a slap in the face after what he's had to say about them. So, and yeah, he totally kissed his ass too. So I have to say I kind of lost some respect. I wasn't going to get into that right off the bat, but your comment kind of triggered me, I guess. Anyway, okay. So we have to keep feeding the audience the red meat that they want. Okay. Let's see here. On this channel, at least, I can assure you, like, we won't talk about taking home equity loans. I know this is going to get me in trouble saying this, but we won't be talking about using margin. We won't ever talk about going into debt to invest. My philosophy has always been to build assets and invest like with the money and the assets that you have, not to go into debt to do it. That's just my philosophy. I mean, you all do whatever you want. You know, you're your own people. I'm not going to tell you what to do, but I would not go into debt or take out extra mortgages or anything like that to create extra dividend income. Like that's all fine. Like if you want to accelerate your income by doing that, that's, you know, you do you, as they say. But for me, I just believe in building assets and using the money that you've earned through work or whatever to actually build a net worth and to invest that way. That's just me. So, and I know I'm going to get into trouble for saying that, but there, I said it. Um, red meat is goaded. Yeah. Sorry, I'm just a little ticked off this morning. I saw a video and stuff where those two are allied, and the gloves are kind of off. You know, our channels have obviously been on a collision course for a while, so I got kicked out of that Discord, you know, for no reason and stuff like that. So, and he chose to totally kiss that guy's ass. So his friends like retire on dividends, and the other people, I think they should really feel a slap in the face, honestly. I wasn't going to get into all that right off the bat, but yeah, I don't disagree. You know, I mean, and Matt has a totally fake portfolio, by the way, which is provably fake. So let's just get it all out there to start off the morning. How about that? Anyway, what was I actually going to talk about in the video? I know I'm going to get into trouble for all this stuff that I'm saying. Um, all right, so Tesley. All right, so $10,000 in Tesley. I just wanted to see at a basically 52-week low, or basically an all-time low. I just wanted to run some projections on this because I'm actually still holding the bag on this. I mean, I don't disagree that it sucks as an investment, but I'm still holding the bag on it. So, um, anyway, yeah, the gloves are officially off, um, but between these two channels. So I'm not going to pull any punches anymore. Um, and I really lost respect from the way he kissed the guy's ass after what he's had to say about all these other channels and stuff. So there we go. All right, Tesley is at 1508. So if we on $10,000 of our own money, by the way, not of borrowed money, but of our own money, if we bought at 1508, we get an error. Oh, because I used the dollar sign. Okay, so we would get 663 shares, just 3 off of 666. Darn. Oh, well, we were almost there. Okay, let's see. I know someone who is, though. Let's see here. Okay, we get an F for several metrics here. See, the ratings here are just rigged, right? If the ratings aren't what we want them to be, that means they're rigged, right? I heard that also said about Schwab. A certain portfolio was graded very lowly. Um, let's see here. Let's see. 69 cents was the last dividend. So let's do this here. I've got a early morning this morning, so I can only stay for like another maybe 10 minutes. Okay, so the last dividend was 69 cents. So let's just annualize this. We'll just keep it simple. Um, so this is based on, hold on a second here. What did we say? 1508. This divided by 1508, it's 55%. So just to keep it simple, okay, say 10,000 times 1.5491, that's our rate. So conceivably, if nothing changed, if this fund didn't fluctuate at all, which I think by now we know better, right? But this is just, again, a textbook example, like they say, holding all else equal. Um, in year one, I hate this, like it tries to figure out what you're trying to do. In year one, we would be there. Oh, what the hell? No, this isn't what I want. In year one, we would be there. In year two, we would be, oh my God, this is driving me nuts. Just let me, it's trying to like freaking second guess me. Just let me do what I'm trying to do. All right, equals, what cell is this? I guess I'm gonna have to manually type it. Cell N17 times 1.5491 is the math. So conceivably in 2 years, if nothing fluctuated in Tesley, we would more than double our money. Oh my God, this is really driving me nuts. All right, so that's year one and year two. So I do find it funny, by the way, that guy got kicked out of their Discord and now they're all like one big happy family. So anyway, all right, let's see. So year one, year two, but say that we go from 1508. Say that this happens, 1508. Say that we see NAV erosion, which I know some people don't give a shit about, even though it is a real problem. That's another thing, by the way. If you've lost like 40 grand in Tesla, I think you would care about NAV erosion, which, there are some people out there that have lost that much. I think we know who we're talking about. So I think it's very disingenuous to sit there and tell your audience that you don't give a shit about NAV erosion when you've lost like 40 grand and like one ETF. I mean, give me a break. All right, so say that we have like 10% NAV erosion. So in year one, year two, we would be here and here. So our $10,000 investment, which we started with this many shares, they would be worth this in year one, and then year two, they would be worth this. Come on, this thing is like the spreadsheet needs coffee or something. This is really driving me nuts. Okay. And then in this one, all right. So we would be down to 8,100, but we would be getting, here's what will happen. The dividends we're getting are based on a lower amount, right? So we would still end up being here. Hold on. See, we have to take this into consideration too. We would actually be here, and then just say this keeps compounding. Say, we're making a lot of assumptions here. Say this all stays the same. 5491. We would still double our money even with it dropping, which I know these people are going to be like, oh, we'll see, it's all good, but really you've got to base it off this. Okay, if it keeps dropping, if it's here times 1.5491, we would be here, and then 1.5491. This is an overly simplistic example, but the dividend income would replace, in a sense, what we're dropping, but this is assuming a very low rate of droppage. Say we keep dropping like 20%, then we're here, see, in year one and then year two. So we're still making dividends, but you have the NAV erosion is the point here. So that is an example, like theoretically, if nothing changed, we could recoup our investment within 2 years, but at this low point. Will we ever get back to where we were? Who knows? It depends on the underlying too, which has been in the crapper for a couple of years now. And then of course, with this, like 20% NAV erosion, things are kind of offsetting each other. Anyway, so that is an example there. Theoretically, 2 years, but who knows? Anyway, let's see. Oh, I don't have time for that right now. Yeah, I saw a video out there and I'm a little fired up this morning. Like obviously people will stoop to any level they have to grow on here. So, we can't see the spreadsheet. I was sharing it. You keep saying we would be here and it would be this, but we can't see the sheet. Well, I'll show it again. Here it is again. So these are all the numbers real quick. Let me zoom in for you. Somebody always has a complaint about something, no matter what. That's showbiz for you. Okay, so $10,000 would get us 663 shares. We're 3 shares away from being perfectly evil at 666. We get a dividend of 69 cents. Somebody make a joke about that. 55% dividend yield right now, holding all else equal. In the overly simplistic example, we would double our money within 2 years. But again, assuming 20% NAV erosion, we would be, unlikely. We'd be at like 15,000, which is still a positive return, but we're not doubling our money in 2 years. So that's the spreadsheet. That's the last time I'm going to show it on this video. So thank you all for tuning in. Now that Richard King has showed up, now we can go. So like, comment, and subscribe, and listen to Udar Pavroda by Crash and Tesley. Be done with it. Some people call that the Tesla sandwich, which looks like that's back on now. It was off for a while. Now it seems to be back on. Anyway, all right. So I know I'll ruffle some feathers with that one. Nice early morning video. I may be back later today. Need to start ramping up again. Thank you all for tuning in. Like, comment, subscribe, join Discord. We will see you all soon. Take care. Bye.